Good morning and welcome to the PFL Weekly Market Webcast. I'm Curtis Chandler and I'm president of PFL. Let's get into the numbers. Equity markets had a rough week. The Dow dropped 793 points on Friday of last week and was down 411 points on the week. The S&P shed 137 points week over week, and the Nasdaq lost 699 points week over week. In overnight trading, Dow futures are trading higher and are expected to open at 45,584 this morning, up 160 points from Friday's close. Crude oil, on the other hand, had a strong week. WTI closed up $5.16 per barrel on Friday of last week alone to close at $99.64 per barrel, which was up $1.32 per barrel week over week. U.S. commercial crude stocks built 6.9 million barrels week over week and sit just above the 5-year average for this time of year. Distillates added 3 million barrels. Gasoline drew down 2.6 million barrels week over week. Propane added 500,000 barrels and now sit at 59% above the 5-year average for this time of year. WTI is poised to open up $1.97 from Friday's close, reaching $100. On the rail side, North American carloads for the week came in at 334,000 carloads, which was up 1.1% year over year. Intermodal was up, or down rather, 328,970 carloads, which was down 2.6%. 7 of AR's 11 major traffic categories posted year over gain. Forest products was the main laggard, down 24.6%, and has been the soft spot. North American rig count shed 33 rigs on the week. The U.S. down is 9 to 543 active rigs, and Canada is down 24 to 153 active rigs. Now here's what we've been watching out for you last week. The Strait of Hormuz situation continues to tighten. The IRGC has formalized a toll and vetting system for vessels transiting the waterway and charging $2 million per passage. Daily transit have collapsed from 110 ships per day before the February 28th strikes to fewer than 10 last week. Iran's parliament is now moving to codify the toll structure into law. On ethanol, the EPA had a very active week last week. An emergency E15 summer blending waiver was issued midweek last week, and then on Friday of last week, the agency finalized the new renewable fuels standards mandate at 15 billion gallons for 226 and 27, the highest level ever seen. See PFL's Rail Report for further details. And on the policy front, the Surface and Transportation Board unanimously voted last week to overhaul review for rail infrastructure, the first update since 1991. New loading spurs, terminal connections, and crude by rail access points along existing rights of way would get a direct path to construction without an environmental review. Combined with January's reciprocal switching proposal, this is the most significant shift in freight rail policy in a generation. Public comments are due April 24th. If new rail access is part of your business plan now, and now is the time to engage. Crude by rail out of Canada numbers are out and are up month over month. In today's report on Canada's failed energy policy. It was Syria Week in Houston last week. PFL was following that one closely. See today's report for further details of what happened last week in Houston. We are watching fertilizer prices spike just as planting is underway, hurting farmers around the world. We continue to watch key market indicators this week focuses on consumer spending, which is flat month over month. Well, that's your market update for this week. If you need storage, leasing, subleasing, car cleaning, repair, flaring, scrapping, nitrogen generation, or transloading services, reach out to the PFL team today. Please share this report with a colleague or a friend if you think they might find it valuable. In today's report, we have 14 charts and graphs for your viewing pleasure. Thank you for listening to this week's podcast, and thank you for reading PFL's Rail Report. We do it all for you, and it's free. Until next week, I am Curtis Chandler.